Hey everyone, you know who this is, right? Thank you very much for joining our Discord server at the Financial Traders Hub. I truly hope that you will learn a lot along the whole journey. Today I want to look at one company called Lumentum Holdings with ticker symbol LITE. So this company was introduced by Pooja in the communications thread, and I just want to show you how I would look at it from a fresh pair of eyes, meaning as someone who hasn't looked at this company in many months, to determine what are the factors that we need to really consider in trying to understand whether there's a trade for this company or not. So this company finds itself in an interesting industry, especially in the age of AI. With AI, it just means that there will be a lot more data stored and transferred in between data centers and servers for training purposes. So data centers have to invest in equipment that allow them to transfer huge amounts of data and at really high speeds. And this is a solution that Lumentum Holdings seems to be able to offer to data centers. So essentially what we're trying to do here is to work out what does the business model of Lumentum Holdings involve? Why is it trading the way it has been in the past few weeks? And also, we have to look out for the future for this company and understand whether there is something at play for us as traders. So the company will be reporting earnings in around 40 trading days, which is quite far from here. But that gives us a lot of time to look at this company and establish whether there's opportunity or not and position accordingly. So today my aim really is to show you my own process as I'm looking at this company from scratch. So you get to see what are the factors that I normally look at to be able to dig deeper into a company. It might also be the case that as I dig deeper, I realize that there's not really anything at play for this company, and then we just kill the idea. That's also very important as a trader, because you need to understand how to avoid yourself getting into situations where you're chasing down rabbit holes and you're never able to completely wrap up your research and move on to other ideas because you're chasing something that doesn't really matter much. And as traders, we have to be very efficient with our time, effort, and capital. So first things first, what does this company do? This company essentially is involved in producing equipment that allows for the transfer of data at a very high speed. So we're not going to get too much into the details. I understand not everyone is like a physicist out there, but if you want, you can look at these descriptions and Google the terms and get an understanding of what these guys actually do, what type of technology they've got, and so on. So, by the way, this description is from Coifin. It's the basic generic company profile description that you can find on any other free website. It's not mandatory to have Coifin per se, but I quite like it for my research purposes because I get everything in one place and I'm quite used to this workflow. So we'll dig a little bit deeper into the different segments at this company, but more high level data. So this company is trading at $54. It's got a forward PE of 56, which is fairly high. So at this type of forward PE, you would typically want to see high levels of growth for both revenue and earnings per share. If this doesn't make sense, you can go into the terminology thread on the Discord server and we can discuss this a little bit more. I've put some basic definitions there, but I'm not going to waste time on this video to go through these rabbit holes, right? So at the moment, it has a market cap of around 3.7 billion. So it's within the mid-cap space, right? So if I had to categorize this company, I would say it's within the mid-cap growth end of the market, right? So if we look at the share price, it hasn't been doing well. So by the way, here every candlestick, so every like bar here is representative of a week. So this is on TradingView, again another free software. Basically what you can see here that the company hasn't been doing well for the last few years, right? And we'll need to understand why is that the case. Because if we get involved in this company and we start buying shares or express our view for call options, essentially we're saying that we believe that the share price will go much higher from here. And we need to have very good, strong, fundamentally based reasons to make this type of a call. At the end of the day, the analysis and the depth of details that we go into will definitely allow us to develop conviction on our trades. So I cannot stress how important it is to do the work properly and not just borrow ideas left, right, and center. Because sure, you can have very good ideas, but then you would not know how to trade them, because you can borrow ideas, but you cannot borrow someone else's conviction. Keep that in mind. Do your own independent work. And the whole reason for this Discord server is to show you how it's done step by step. So you can be autonomous, independent. You learn to fish. You don't go and steal other people's fishes, right? And really you adopt the right behaviors in the market, because that's crucial for you to be able to succeed. The financial markets are not easy. So you really need to exercise the right type of behavior, have the right education, because otherwise the market will eat you alive. Trust me on that. Okay, let's just get into this a bit more in depth now. So what are the types of information that we can find about this company? What I'm going to do is just try to go into their investor relations segment. So every listed company needs to have an investor relations segment where they will post all these presentations, earnings, quarterly, financial figures, and so on. So depending on different companies, you will have different levels of details. So in this case, I'll start off by looking at the earnings presentation that was done on May 6th. So this will give me an understanding of what the business is like. Just make that a little bit bigger. What are the different segments? What is management saying? And so on and so forth. So just looking at the key points here, it looks like they have two main segments: cloud and networking, and industrial tech. We can dig deeper into what this actually means later, but this is how they structure the reporting of the financials for the business. So the cloud and networking segment, the revenue was up 9% quarter on quarter and 7% year over year. So remember what we said earlier, we are seeing increased data center spending. And this is being confirmed by this earnings presentation, right? So we also discussed in the Discord that we are seeing reduction or peak of capex budgets by the telcos. So obviously the equipment manufacturers are seeing that in the form of softness in terms of lower new orders and so on. Because think about the value chain. The telecom provider will increase capex. That capex eventually goes towards the networking, communications, equipment manufacturers. So that money that's allocated as an increased budget eventually trickles down to other players within the value chain. And the reverse is also true. So if the telcos are cutting down on capex budgets, for whatever reason, it might be high interest rates, it might be that they have reached the end of their investment cycle, especially with this whole move around 5G and so on. It's quite long in the tooth now. It's been going on for multiple years. So a lot of companies that were involved in the whole 5G value chain, they're actually seeing this reduction in capex impacting their business. In this case, we've picked a segment of the market where we believe that the spending is still there and is going to keep increasing as all these data centers compete against each other to be able to build out the right infrastructure that will be required for AI for multiple years from here. So that's kind of the backdrop behind why we're looking at this company specifically. So management is quite bullish on the future opportunities that will come from the data center. This kind of validates our view on the industry, and it's investing accordingly. So We can go down these rabbit holes a bit more as we flesh out the research to a different level. But for now, we just want to have a high-level view of the business and identify really what would be the main 2, 3, 4 factors on which this company is trading at the moment. So quite a few specific things that management are saying. I've already looked into this company a few months ago, so I know that they are kind of, they have cutting edge technology when it comes to this high data speed transfer. So they work on what we call modulators, which basically means that the higher frequency laser modulators that you're able to develop, the higher data transfer speeds that you will be able to achieve. So there's two things. One is data speed, but the other one is also making sure that the data transferred from A to B is exactly the same. So in other words, that you have not lost the quality of data is not lost in between the transfer points. So don't want to go into too much details there. That's probably for Pooja to explain to us a little bit more. But for us, we just want to look at this as a business. A business is just three things, right? It's just three things: revenue, costs, earnings. So revenue minus cost equals earnings. That's all we need to know for every type of business models. We don't care what these guys do. We will always try to simplify things in our head to these three main numbers. Obviously, it cannot be that simple. So we'll have to, of course, get an understanding of what are the income streams that eventually become revenue. What are the factors impacting cost within the business? And eventually, how will all these factors in combination lead to increased earnings or lower earnings? So that's literally the bet that we're making on these trades that we're going to either put on into the portfolio or not, right? So moving on to the next segment, industrial tech. That looks like to be the problem child for the company. As we stand now, we don't know how big or what's the portion of revenue attributed to industrial tech. We'll have to look for that further into the presentation. So revenue was down 34% quarter on quarter here, quite significant. And it was down 42% year over year. So pretty bad if you ask me, but again, we have to get a sense of what these numbers mean in absolute amounts. So what these guys are seeing is literally an inventory correction. So basically what happened during COVID is a lot of companies had been over ordering because they thought that they might have issues with supply chains because of everything that's been going on with ships and lack of labor and so on. So they've pulled forward demand, and as a result, they had too much inventory. And that basically means that for a number of quarters, they have not been ordering at the same level that they would have because they already have a lot of inventory, and they have to, first of all, work through all this inventory before they pass on new orders. So companies that manufacture these equipment will definitely feel the pressure when new orders are being cut because of inventory levels being too high. Let's move on from here. So this is in a nutshell what the business does. So on a quarterly basis, we're looking at around $366 million of dollars. Nothing much to note at this point in time. There's something I want to look at very clearly, which is this. So I wanted to know what portion of industrial tech forms the revenue, because we're seeing significant decreases in revenue. So luckily it's not significant. So 52 divided by 366, that's not significant. The bulk of the revenue is still coming from cloud and networking. So I'm quite happy to see this because we don't necessarily need like a resuscitation in the industrial tech segment for the business to pick up and do really well. Also, it looks like 15% or 14.6% of profit comes from the cloud and networking segment, and the industrial tech is like it's creating a loss of 5%, right? So these are important to understand literally what contributes to the top line and bottom line of the business. So as we see, cloud and networking and understanding what's happening here is very important, because this is what leads the bulk of the numbers, right? Let's move on from here. So this is basically guidance that management gave at the last earnings. So we'll have to compare that with the Q4 financial year 2023 numbers to understand whether they are actually increasing guidance or not. Also, this is a bit problematic, so we have to look into what do these numbers mean in relation to what they achieved in financial year 2023. Is this better or worse, right? Again, so these are the assumptions that they are making in terms of giving this guidance. So basically they are saying we expect cloud and networking segment to be down quarter on quarter. So not good news for us, because that's where we were banking our money. But they expect a recovery or a slight recovery in industrial tech. So again, this is a quarter on quarter comparison. So we need to understand whether moving from Q3 to Q4, if we get a reduction in revenue, is that meaningful? And what do I mean by that? Is basically that lots of companies will have seasonality in their revenue earning pattern. So it could be that Q4 is a seasonally weak quarter. So we expect to have a decrease in revenue in Q4 versus Q3. So to establish whether that's a good or bad thing and how good or bad it is, we have to look at the last year's quarter in Q4 and assess everything from that perspective. Okay, so that's it. Then there's one more thing I want to look at, which is very important. So management reported this thing. They repaid convertible notes 2020 expiring in 2024 with 323 million in cash. So that's a great development for the equity of the company. It's quite a complicated concept, but essentially what convertible notes are, they are a debt instrument. So it's a debt instrument that the company had used to raise cash in the past. But the problem with convertible notes is that it can be highly dilutive to the equity. So we can look at that a little bit more in depth in the Discord server. But essentially, convertible notes are a mix of fixed income debt, but there's also a possibility for whoever's lended the money to convert the debt into additional shares of the company, which is why it creates this dilutive impact. So being able to take that off the balance sheet is a positive for the equity. But again, we have to understand what's that in proportion to all the debt or convertible notes that the company might still have on its balance sheet. If it's a drop in the ocean, then maybe it's a good thing because management will start doing more and more of these things. But if it's a drop in the ocean, it would not really matter much to the equity. I suspect it isn't, because otherwise management would not have really mentioned it as part of the key points in this presentation. So let's just move on now. I wanted to look at something else. So there's a few more information that the company has made available. So they presented at the Bank of America's Securities Conference, the Global Technology Conference. So you might want to go and read the transcript and see what management is saying in terms of the business. I think if you're going to go along this company, you owe it to yourself to do that, to do the right level of homework around this. The next thing I would look at is the transcript. So basically the earnings call transcript, because I want to understand what is management saying about the future of the business. So as you can see, this is literally like the transcribed version of the earnings call. So you don't have to read everything, but there are segments that you need to read and understand what is management saying about the future, especially in terms of where they will see demand that will increase the value of the business, right? So that's something that we have to read and figure out what are the important points. And eventually we have to narrow it down to maybe the like top 4 or 5 factors on which this business is trading. One of the important things to look at is definitely the debt. So this is something we will get from the investor relations, or it's normally under the SEC filings. So all listed companies have to file these filings on a regular basis. So if we look at let's say the quarterly report, I think I'm going to look at the 10Q. Let's just quickly wait for that to load. So it's a 100-page document, but again, I'm not trying to become an expert in this company, right? So I'm interested in the debt. So I'm just going to search for debt. And essentially what I want to see is what are the debt instruments on the balance sheet as we speak. Because we want to work out what does the payment of or buying back the convertible notes of around 323 million, what does that mean for us? Okay, so I think this is probably what I was looking at. So they still have, so as you can see, they've paid off these 2024 notes. So there's a 0 value assigned to it in March 2023. But they still have a fairly chunky sized level of convertible notes that expire further into the future. So that's not a great position to be in, because this debt, which is dilutive which can be dilutive to the equity, will always be an overhang on the share price. But that's just something for us to note. Let's not get discouraged by that, because there's another argument that all of that is already priced into the share price, right? So now we have to understand what is management's plan in terms of this all this debt that's expiring out there in the future. Are they planning to use more cash flow to actually extinguish this debt? In which case, this would be greatly positive for the equity. So these are the routes that we have to start chasing, because we need to find answers to these questions, because that's where we'll understand whether there's more value in the equity than what the market is giving it at the moment, right? I don't want to go too much into details. Probably I'll end the video here itself. Yeah, you could look at this in more details and understand the different segments. The 10K and 10Q forms tend to be very detailed, because this is a regulatory filing. So they have to make sure that every single thing is accurate. And a lot of times when we want to dig deeper into the data, this is where we go find our information. And the great thing here is a lot of investment participants don't even open these documents. And there's a ton of information here. A lot of assumptions that people make can be proved or disproved by looking at these documents. It really gives you a great chance at understanding what the business truly is and where it's going once you start looking at these documents more in details. But again, we're not here to read like a 100-page document. What we want to understand is basically form a few questions in our head, because we believe finding answers to them is extremely important. And then we look for these answers in all this information that the company has made public. right? So this is something we want to read, net revenue. There might be a bit of management commentary as well. So to understand where the revenue increases and decreases are coming from and what they project for the future. I think, yeah, that's probably about it. Maybe I'll go back to Koifin and just take a look at what analysts are estimating for the company. So as we can see, we've already gone through all these 3 quarters for financial year 2024. So by the way, guys, one thing we have to note, financial years for companies can be very different from calendar year. What I mean by that is, for instance, calendar year 2024 starts on January 2024, right? But many companies can have the financial year that starts in June or Q3 or Q4. So that's why you'll see a lot of times this financial year does not necessarily align well with the calendar year. So nothing really there. It's just a little bit of detail that you have to get your head around, right? So there's basically been 3 quarters done for the financial year for this company. And what they're projecting for the next 2 financial years is for revenue to increase by 11.4% in 2025 and subsequently by 29% in 2026. So that's a great position for us to be in. And if we want to look back in time, the reason the share price was suppressed is because they experienced a meaningful decrease in revenue in 2024. So decrease in revenue is not great because the costs of the company start biting, and then earnings per share will decrease significantly, right? So if we move to earnings per share, we'll see that, right? So revenue fell by 23%, but the impact on revenue on earnings per share was close to 80%. So it's a really bad situation when you find yourself in a position where revenue is declining so quickly and so much, right? But the opposite is also true, right? If you are expecting like an 11% increase in revenue, that could mean a 70% increase in earnings per share. So this is a really interesting situation for us to look at. And the reason why this is trading at 56 times forward earnings is because of these very high rates of growth for the EPS. So whenever we look at these companies, we cannot just immediately say, oh, 56 is too high. We have to understand why is it priced at 56. And then as we dig down into the business, we understand what's driving the business. We investigate whether these numbers are reasonable, whether these numbers are achievable. If they are not, then it just means that the company has more room to fall, that this 56 might go down to 30, 20, depending on how overestimation, depending on how overestimated these numbers have been by analysts. So as we look out into the future, of course, everyone gets things wrong, including analysts. So this is why we have to stay close to the business and really investigate whether these numbers make sense or not. Or you might look at it and say, oh, by the way, 70 is at the low end. I think this number could be, let's say, $2, which means that you've literally increased the EPS by more than 100%, and the market has not yet picked up on it. But you can only make these conclusions once you've understood the business in depth. And as I've said before, this is literally what will give you conviction on trading this company or any other companies that you might put in your portfolio. So that's it from me, guys. A lot of it might sound a bit complicated, but I just wanted to show you what are the things that I would typically look at the start of the investigation process. And also I want to try to avoid myself and ultimately you to be going down rabbit holes, because there's no money to be made, just wasting your time in documents. There's a lot of money to be made in distilling all that information down into what really matters and understanding the factors that drive the share price and figuring out how that is likely to change over the next 4 to 8 weeks. Okay, I hope this was useful. As usual, please send me all your questions in the Discord server. Pooja, maybe let's look at this a bit more in depth and flesh it out and eventually see whether there's a trade to be made here or not. I hope this is useful to just point you guys in the right direction. And of course, anything that's not clear, just send all your questions on the Discord server. I'd happily answer it. Okay, cool guys. Look after yourself. Let's meet on the Discord server. Cheers. Bye-bye.